one of the most difficult ratios is cost to income. How can you do to do better on that?
Yeah, the cost-income ratio is an important indicator for us. Is a totally misleading indicator. We are, structurally speaking, we are in a business that has a higher cost-income ratio. We don't have a very large commercial and corporate banking business that sustain a group-wide much lower cost-income ratio. So we offset this higher cost-income ratio with a high efficiency on how we deploy capital. We are the 5th best bank in the world in terms of return on regulatory capital. Okay, so which is very important for us because the noise that we have in our tangible book, because we have a lot of deferred tax assets and we pay only once a year our dividends. So there is a big gap between tangible and regulatory capital. So we, as long as we trade at the high end, after the few American banks, we are the best non-US firm, and there are 1 or 2 other US firms behind us in terms of return on capital. So that those two ratios needs to go together.
Do shareholders understand that?
Some of it, yes. Some of them, they still need to really analyze this issue. But particularly, I think that is more some other commentators that they really don't want to listen to that. They look at the cost-income ratio per se as an indicator of inefficiency, and is not correct.
Talk to me about the French case. Do you know how that will go? What's your hunch at the moment?
No, I don't know how it's going to go.
Okay. Are any further share buybacks contingent on
no,
that?
I think that, of course, the French matter is an important decision point for us in respect outcome in respect of how we're going to implement our capital return policy in the second half of the year. For the first half of the year, we say that our aim is to buy back more than half of what we did last year. Then we're going to wait the outcome of the French trial, which may come late summer, early autumn, and we will reassess the situation.
Every year in Davos, I ask you whether we're going to see consolidation in the banking sector in Europe. Is 2020 the year?
And one day is going to come. and actually, as time goes by, we're getting very close to that moment. And I do believe that the second half of the year is going to be a very important moment, because you're going to see the finalization of the Basel III, Basel IV rules on how they're going to get implemented in Europe. That's before that or after that, you may start to see people really realizing the need of offsetting shortage of capital with combinations, and I think it's a necessity for Europe. It's not a matter of if, is when and how and who, and it's not if this should happen or not.
But is that really a catalyst?
Sorry?
Would that be really a catalyst for banking consolidation?
No, I mean, already today, without any further developments in that sense, you have an issue of critical mass, focused critical mass. So I'm not saying that scale per se is the solution, but you need, when you are focused and when you have capabilities and you are good at, you still need scale. No matter how good you are positioned in the competitive landscape, scale matters. Scale allows you to create the resources not only to offset margin compression, but also to deliver better and pass it to clients. Is also to deliver the savings to have an attractive capital return and to reinvest in the future.
Okay, so is there something? Would you be part of this consolidation if bigger is better?
Nobody can afford to say that is not part per se of a consolidation process. We don't need per se to do consolidation, but we have to consider all the time, and it would be it's part of our job to always look at potential combination that creates client, and also at the same time shareholder value.